back to another Ariaswave USD yen video. Now, I am definitely short the yen. I'm going to explain to you in this video why I have taken so long to come back to you. But anyway, it doesn't matter. I'm short the yen. Sorry, I'm short the USD yen. Yen strength underway. Uh, I believe that it's part of the yen carry trade unwind. We're going to see the yen strengthen, even though the prime minister that just got re-elected with majority power in the government. It's a complete distraction. They don't even control much of the interest rates and policies anyway. They are just literally a distraction at this point. But I think that the increasing in the JGBs bond yields there definitely is going to be increasing the value of the yen, but also more attractive to investors. Therefore, a lot of capital will be fleeing the US, coming back to Japan. And I think that's a lot has a lot to do with the fact that Japan is, holds more, probably the biggest holder of US debt, you know, or ranks among the highest. So looking at this pattern now, what do I think the bigger view is? Yeah, right. So basically, the reason why I believe we are seeing this right now, we'll go to the hourly chart, right? So I believe this is the top of wave two. So we did have a break of this level back here in January, where we bounced in wave two. Yeah, so we did pierce that level, which was a sign that you know basically wave E was over. It was the fifth wave of a weak five-wave move. Right. So back here in April, we had wave one, we had wave two, and then wave three. Wave four ended here, and then wave five. Now, obviously, I had been trying to short this with incorrect knowledge, but shit happens. You get it wrong a million times. But I actually went short on this after we broke the initial low, but then obviously I had to wait for a pullback again before I added any more positions to contracts to this trade. So now we're shorting, and I'll tell you where I'm aiming for in a minute. So uh, I did post a gold video just before this one. I haven't posted for a while, and I'm also short gold. So go figure. It doesn't necessarily mean that you should be shorting gold. Sorry, bullish gold if you're shorting the US dollar. You should always trade every chart for its own merits. So anyway, moving forward into the conversation. So this is the E wave. So Ariaswave, if you didn't know, it's not Elliott wave. Elliott wave is very subjective in its nature. Um, the people who praise Elliott wave, they just never decided to go and look at the charts themselves and really try to figure out what's going on. I did that 10 years ago. It's a 10-year anniversary for Ariaswave invention. I believe that what happened here, we hit a top. We had wave one. So the top was here in July 2024, right? We hit a top, right? We had wave one. We had a expanded wave A. We had a C, D, E. Sorry, a B, C, D, E, right? See how small that C wave is? It's not uncommon. It does happen, right? But this is why Elliott wave fails, because it doesn't really give you the ability to track these type of things, right? When they happen, they happen, and it's very easy to try and guesstimate, but you can be pretty precise if you know exactly what's happening. So you have a C, D, E. So the E wave made this whole structure look like a zigzag, right? Because uh, uh, you know I- I've seen what professionals sort of try to aim for in terms of trading, and they all trade zigzags. So seeing that there was the support held here at the lows, they traded this like a zigzag, even though there's a bunch of waves in between that explain the pattern a lot more in a lot more interesting way. Anyway, so yes, I do believe that yes, we are going to see a decline. So where are we going to decline down to? So for that, you need to understand how I see the bigger pattern, right? So going to the long term, right? Since 1971, oh, well, obviously Nixon removed the gold standard, so things were free to float around like like up and down, crazy stuff, right? So money printing galore, extreme, everything's crazy. We have a one, two, three, four, five. At this point in time, I do believe that was a five-way move down to 2000, sorry, 1995. We had an A, B, C, D, E pattern bounce, right? So at this point, look, there is a chance that we could see prices go to 37, which is catastrophic for most people to fathom. But I don't think it's going to get there in a straight line, right? So I think that what we're going to see is going to happen in like segments, right? So what I think is going to happen, at least for the initial move, we're going to see a move down to somewhere like a support level, like 99, right? 98, 99, because you know how it works. You have support levels, and one, two, three, four, five pattern can definitely happen during that time, like it did here. One, two, three, four, five. Right. So in reverse, five-way move, and it could start to set us up to start creating some kind of symmetry in the market. Could be in a head and shoulders pattern. That's what I'm thinking is going to happen. But for now, I'm not going to get into that. We're looking at a move, a five-way move to the downside. Stay tuned. I'm going to cover this. I've been waiting for this move for quite a while. I was early. I was studying. I was learning a lot of stuff. So, things can get pretty crazy when you're trying to do a million things at once. So at the moment, you can quite clearly see that this is definitely about to break through the bottom. It's going to literally tank to levels that a lot of people probably wouldn't assume that would happen. Um, but yeah, like, look, even though we have non-farm payrolls coming up tonight, I'm in Australia, in Melbourne, so we're looking at a midnight thing here. So I'm probably just going to go to sleep. I don't care. I'm already short this. I do believe we did hit wave two up here, so you can put your stop down if you from the top shorting 157.669. I don't think this thing's coming back. I think we've done it. That's it. Nail in the coffin. Yen carry trade unwind underway. So that's my view now. Ariaswave has taken a different approach to the macro. It's not purely technical analysis anymore. It's also understanding what's going on under the hood of the mechanics in the market and structural, shifts that can occur. So yeah, expect a lot more of that to happen in this channel from now on. And I'm going to try and revamp it shortly. Even might even resurrect a new website. Who knows? Let's not get ahead of ourselves. And anyway, I hope you enjoyed this update, and I'll catch you in the next one.